Assalamualaikum and hi. My name is Farsha Nazura binti Fazli and my metric number is 2024235858. My group is from ACC407 and we were assigned to do a group project about fundamental financial accounting and reporting of a sole proprietorship or partnership business. The business that we choose is Nadlis, which is a sole proprietorship. This is our group members. We have 5 members, which is Lia Sarah, Farisha, Nurul Ain Karmila, Nur Akmal Nabila and Nur Hafiz. In this video, we will explain about Nadli's background, business characteristics, classifications of business items, the recording process of the business, also Nadli's strength and weakness. First and foremost, I will explain about the business background. Our group decided to choose Nadli's business in our group project. The name of this business is inspired by the owner's name, Nadis Hadi. This business sells nasi kandar. As I said, Nadis is a sole proprietorship business. The owner's capital amount, 20,000 ringgit, is obtained from his own money, also contributed by his family members and friends. This means he used his own capital and money from his family and friends instead of taking a loan. At the beginning of Nadis' business, Nadis started selling nasi kandar from a food truck, but at that time, the name of the brand did not exist yet. In 2021, Nadis started his business at the Faculty of Business and Management, Plaza Satellite B in UiTM Punca Alam, and used the name Nadis as his brand. In the middle of the year 2034, Nadis moved to Lot Number 1, ground floor, pusat kegiatan pelajar in UiTM Punca Alam, Selangor, until now. The owners of Nadis said he has planned to open a new branch outside of the campus in the future. But for now, he wants to focus on the one and only his nasi kandar business that is currently located at pusat kegiatan pelajar. Nadis has social media accounts to promote his nasi kandar business. Each are an Instagram account named Nadis Cafe and a TikTok account also named Nadis Cafe. There are many videos and posts about the main menu nasi kandar and the situation of people buying nasi kandar at his shop. You can refer to the names of this account at the bottom of this page. That's all from me. I will pass it to my friend to explain about the business characteristics.
Hello, Assalamualaikum. My name is Nur Hafiz Hazim bin Sudirman and my matrix number is 2024236018. Today, I'm going to present about the business characteristics that I have in Nasi Kandar Nadri business, which the business is a sole proprietorship. Let us define first what is a sole proprietorship. A sole proprietorship is a business owned and run by one individual with no legal distinctions between the owner and the business. Under the business characteristics, there are 5 keys that I would like to share, which the first one is the registrations of the business. Registration is a process of formally recognizing the business with the appropriate government or regulatory authorities. Registration typically involves minimal paperwork and costs. Hadli Nadli starts a business as a sole proprietorship, meaning that Hadli Nadli as the owner himself registered the business name Nadli Nasi Kandar with the local government by applying Bumi Putra Certificate MOF to obtain its food handling license and applies for a tax identification numbers. This process ensures that Nadli Nasi Kandar is compliant with the local laws and can operate legally to sell his Nasi Kandar to students and everybody else. The second business characteristic is the capital. Capital refers to the funds or resources the owner invests in the business to start and operate it. The owner has full authorities over the use and allocation of the capitals. In the sole proprietorships, the capital is usually raised by the owner from personal savings, borrowing, or other sources. Hadli Nadli stated that he invested in his business Nasi Kandar using his own personal savings and some borrowing from his friends and his family. This shows that capital in the sole proprietorships is the backbone of the business, entirely owned and managed by the proprietor. The third business characteristics is the profit or loss. Profits belongs to the owner and any losses incurred will be borne by the owner. It is because the business and the owner are the same entity, meaning that the business is the business Nasi Kandar Nadli and the owner is the Hadli Nadli is the same entity, and the profits and losses are directly affects the owner's personal finance. In this context, Hadli Nadli earned his profits by selling his Nasi Kandar to the number of students, while his losses are all affected when he faces through some challenging times such as decreasing in the number of its customers, paying taxes and other expenses. The fourth business characteristic is the ownership. Ownership refers to the individual control and responsibility the proprietor has over the business. The owner has complete authority to make all business decisions from operations to finance. The owner is personally responsible for all debts and obligations of the business, as there is no legal distinctions between the business and the owner. As the sole owner, Hadli Nadli has the exclusive rights to decide Nasi Kandar's menu, pricings and hiring of staff. All profits earned from the business Nasi Kandar belong to Hadli Nadli, but he also personally responsible for any debts or liabilities incurred. For the fifth and the last business characteristics is the management and control. Management and control refer to the authority and responsibilities of overseeing the operations, decision-making processes within the business. The owner can quickly adapt and implement changes based on market conditions or personal preference. The owner directly oversees daily operations, ensuring alignment with their visions and goals. For instance, if Hadli Nadli wants to introduce a new product on its business Nasi Kandar, they can do so immediately without consulting others. While this provides great flexibility, it also places the full burden of responsibility on the Hadli Nadli shoulders. And that's all from me, thank you. And now I will pass down to my friend who is going to present about the classifications of business items.
Hello and Assalamualaikum. My name is Lia Sarah binti Azhar and my matrix number is 2024299324. Today, I would like to present the classifications of business items, which are key components in understanding how businesses operate financially. These classifications are divided into five main categories, which is assets, liabilities, owner equities, revenue, and also expenses. I'm going to start from the first one, which is assets. Firstly, assets represent everything the business owns and are either cash or can be converted into cash within 1 year, and they are further divided into current assets such as cash in hand, bank, and inventory, which can be converted into a cash within a year. And the second one is non-current assets. Non-current assets are assets that have a useful life of more than 1 year and are bought not for resale but for use in the operation of the business. For example, cooking equipment, furniture and fittings, and vehicles, which are used over the long term to run the business. Next is liabilities. Liabilities can be referred to what the business owes to others. Liabilities can be divided by two, which is current liabilities and non-current liabilities. But not least businesses only have current liabilities. A key example of current liabilities is an account payable, which refers to debts or obligations due within a short period of time. And the reasons why Nadis only have current liabilities is because the owner of Nadis business only borrow money from their families and friends to support their operations and capital. And we're gonna go to the third one is owner's equity, which can be defined as owner supplied funds to the business for the acquisition of assets for the business. For example, capital and drawings. Capital refers to the resources the owner provides to fund operations, while drawing occur when the owner withdraws money or assets for personal use, which reduce the business overall equity. The fourth key component is revenue, which represent the income generated by a business from its core operations. Revenue is a fundamental measure of a business performance and financial health, as it directly reflects the value of goods and services sold within a given period. It is often regarded as the top line on an income statement, signifying the starting point of a company's profitability analysis before accounting for any expenses. In the context of Nadi's business, the revenue is primarily derived from the sales of nasi kandar. The total revenue will encompass the monetary value of all portions of nasi kandar sold during a specific time frame, such as a day, month, or year. The last one is expenses. The final key component of a business financial framework is expenses, which represent the cost incurred and the process of generating income. Expenses are the resources consumed or services utilized by the business to carry out its operations. These costs are an essential part of running a business, as they directly support the activities that drive revenue. For example, Nadli's business have a payment for purchase of rice, chicken, coconut milk, vegetable, and spice. They also have utilities expenses such as electricity bills and water bills. They also have advertising expenses, for example, the printing menus they display in front of their shop. Other than that is rental expenses, salary, maintenance, and car fuel. And that's all from me, and my friend will continue for the next part, which is the recording process of the business.
Assalamualaikum and hello everyone. My name is Nur Akmal Nabila binti Muhammad Izam. My metric number is 2024-804-034. So today I would like to talk about the recording process of the business and explain how Nadli's Cafe records its financial transactions. The accounting cycle is a series of steps that businesses follow to record and process their financial transactions. This process ensures that financial records are accurate and up to date, helping business owners, which is Mr. Nadli. The first step in the accounting cycle is transactions. These are any activities that involve money, such as selling a plate of nasi kandar, purchasing supplies for the kitchen, or paying staff wages. Every transaction, whether it's a sale or an expense, needs to be recorded because it affects the business financial positions. Next, source documents. These are the original records that prove a transaction occurred, such as receipt for nasi kandar sales, invoices from food suppliers, or payment slips for other expenses. These documents are crucial for verifying each transaction. Then, the transactions are recorded in journals. Each transaction is noted in chronological order with details like the date, amount, and accounts involved. For example, when a customer buys nasi kandar, it's recorded in the sales journal, showing the revenue from the sale and the increase in cash. After that, the information from the journals is posted into ledgers. Ledgers organize transactions by account type, such as the cash account, sales account, or expenses account. This helps track balances and give a clear view of how much income is coming from nasi kandar sales and how much is being spent on ingredients. Once all transactions are recorded in the ledger, a trial balance is prepared. This step ensures that the total debits match the total credits. Before finalizing, adjustments are made. Adjustments ensure that the financial records reflect things like depreciation on kitchen equipment or the cost of goods sold, such as ingredients for nasi kandar. These updates make sure the financial statements are accurate. Lastly, financial statements are prepared. These include the income statement, which show the profit or loss from selling nasi kandar and other items, the balance sheet, which shows assets like kitchen equipment and cash, liabilities like supplier payments, and equity and the cash flow statements, which tracks the cash inflows from sales and outflows for expenses. Nadli's Business Cafe use digital tools to manage its business operations. They use apps like Zoho Books for accounting and Loivers for their POS, which is point of sale system. These apps help keep everything organized and efficient in managing their financial records. How are these payments recorded? Nadli's Business Cafe use two apps to manage everything smoothly. The first is Zoho Books Accounting. This app is all about accounting and managing finances. It helps track income, expenses, and even generates financial reports like profit and loss statements. The second app is Loivers POS, which stands for Point of Sale. This app is perfect for managing daily sales and inventory. These two apps complement each other perfectly. By using these apps together, the cafe ensures its finance and daily operation are always organized and running smoothly. Even though Nadli's Business Cafe use apps like Zoho Books and Loyverse, the accounting cycle is still followed. These apps help automate and simplify each step in the process. For example, transactions such as sales and purchases are recorded in source documents like receipts or invoices, which are then entered into Loyverse or Zoho Books. The apps automatically update the journals and categorize transactions into ledgers. When it's time to prepare the trial balance, the apps generate it automatically and reducing errors. Any necessary adjustments, such as inventory updates or depreciation, can also be made directly in the system. Finally, the apps create the financial statements like the income statement and balance sheet, which help the business monitor its financial performance. By using these apps, Nadli's Business Cafe makes the accounting cycle more efficient, accurate, and organized. The conclusion is Nadli's Business Cafe handles payments through cash and online transfer and record them using Zoho Books for accounting and Loyverse POS for sales and inventory. By combining these tools, the cafe can stay organized, save time, and focus on growing the business. This system ensures everything runs smoothly, both in the short term and the long term.
Assalamualaikum, my name is Nur Ain Karmila binti Mazli. My ID number is 2024680189. I would like to share about the strengths and the weakness according to the recording process of Nadlis. My first point is cost effective. Using an accounting app like Zoho Books Accounting can be a cost-effective solution by automating tasks like recording transactions and generating reports, which cut down on manual work. This helps avoid costly mistakes like overpayment or missed tax deduction. The app also gives insight to better manage cash flow and reduce unnecessary expenses, saving both time and money. My second point of strength is organized record keeping. Using an Loyverse POS application to record sales keeps everything organized by automatically logging each transaction and updating inventory in real time. It can easily access past sales, run reports, and track trends without the hassle of manual tracking. The app ensures consistency, reduces error, and streamlines invoicing, making it simple to manage sales data and stay prepared for tax or audits. My third point of strength is accessibility and flexibility. Online accounting apps allow access to financial data anytime, anywhere, and on any device. They support real-time collaboration, secure user permission, and seamless operation across time zones, making financial management more flexible and efficient. Next, we go to the weakness, that is potential of error in manual entries. Users might accidentally enter the wrong amount, account number or description, or even duplicate transaction, which can throw off the numbers. Sometimes, transactions might get categorized incorrectly, leading to inaccurate reports. Mistakes can also happen during the setup or customization process, like getting tax rates or currency format wrong. Additionally, when importing data from other systems, there's a risk of mismatches or missing entries if the mapping isn't done correctly. Last point of weakness is time-consuming. While accounting apps save time overall, they can be time-consuming during setup, which involves importing details and integrating with other systems. Manual updates, error correction, and generating reports can also take extra time. Users unfamiliar with the app may need time to learn how to use it, and regular updates or maintenance can disrupt operation. That's all from me. Thank you.